Welcome back to the show. I'm Anshari Perera. Now we're going to stick with the banking sector, and joining me from Frontier Research is product lead Anshari Perera, and she will go into a little bit more detail in terms of the regulations to come in for the banking sector and also how they will affect capital raising activities. Welcome back to the show, Anshari. Now, to start with, how do you see the banking sector's performance in the first quarter of this year?
So the banking sector was coming out of a rather challenging year in 2018. Some of the factors seem to persist in the first quarter of 2019 as well. So one of these was, of course, the rising NPLs or non-performing loans. This was at around 3.4% in 2018, and it increased to 4.2% in the first quarter of 2019. So in light of this, the banks also seem to be a bit more selective in their lending, and we saw the private sector credit growth also reducing gradually in the first few months of 2019. The year-on-year growth in private sector credit was at about 15% in January, and this gradually reduced to about 9% by May. So in terms of the overall profitability of the sector, this slowdown in credit growth also impacted the bottom lines of several banks, where it translated into the contraction in non-interest income at many of the banks. So overall, in the banking sector, net profits dropped by about 29% in the first quarter of 2019.
What about the regulatory environment, Anshari? What new regulations will be coming in, do you think?
So because of the sluggish economic growth that we saw, the central bank has been trying to push down lending rates in order to sort of push loan growth as well as spur economic growth through that. So the central bank introduced a deposit rate cap in April 2018, which is mainly linked to the treasury bill rate. So the intention in doing this is to bring down lending rates through this by about 200 basis points. This deposit rate cap is to be revised quarterly. So after it was implemented in April, it was again revised for the third quarter in July, and the deposit rate cap came down by about 171 basis points in July. So we saw banks also reducing the fixed deposit rates in line with this. But in terms of a fall in lending rates, if you look at the average weighted prime lending rate, which is based on the interest rates that commercial banks charge from their prime customers, this has gone down from April, when the deposit rate cap was implemented, by about more than 120 basis points. But if you look at the average weighted lending rate, which is the interest rate based on the overall all outstanding loans in the commercial banking sector, this hasn't changed much from its levels in April. Of course, at the same time, they are also very closely monitoring these portfolios of the banks, and have said that if they are forced to, that they will sort of bring in a lending rate cap, maybe as a last resort.
So on those regulations then, Anshari, what does this mean for capital raising activities within the banking sector?
So in 2018 and in the first quarter of 2019, we saw a lot of banks sort of going through that with the capital raising activities. And we also saw some of the banks being impacted by the unfavorable equity market conditions that prevailed during that time. So after around the first quarter of 2019, we saw the banks cutting back on their plans to raise capital and sort of having a wait and see approach to see if the market conditions will turn around. But of course, there are several banks which have thinner margins or thinner buffers compared to the minimum capital ratios, which will have to eventually raise this capital at least by 2020. Also, given the developments after the attacks, which is likely to result in erosion of their capital bases.
Thank you for joining us, Anshari.
Thank you.
That was Anshari Perera, product lead from Frontier Research on the banking sector. Thank you for watching Benchmark, and we hope to see you again next time.